Today I will tell you in accounting the basic accounting terms. Okay, so the first one is a business transaction. Business transaction is an economic activity of the business which changes its financial position. The business transaction may change the financial position in terms of change in values of asset, liability, or capital. The good examples of business transactions: sale of goods, purchase of goods, payment made to suppliers, cash received from a customer, payment of expenses, etc. Now, the next term is account. It is a summarized record of related transaction at one place under a particular head. For example, all transactions relating to cash are recorded at one place, that is known as cash account. Then the next one is capital. You know, Capital is the amount invested by the owner in the business. It may be brought in the form of money or assets having a monetary value. Capital is the excess of assets over outside liabilities. In equation form, we can speak capital is equal to assets minus liability. Capital is also known as owner's equity, net worth, internal liability, and proprietor's fund. The next term is drawings. Withdrawal of money and or goods by the owner from the business for personal consumption is known as drawings. Drawings reduces the investment or capital of the owner. The next one is liabilities. The liabilities are obligations or debts that an enterprise has to pay at some time in the future. That is like the amount owed by the business. Or in other words, we can speak liability means the enterprise has a need to pay something to other in future. The liability may be called the internal liability and the external liability. The amount payable to the owner, is called the internal liability. The amount payable to the outsider is called the external liability. The good example of external liability is creditor. Now I will tell you the next term, that is assets. Assets are economic resources of an enterprise which can be expressed in terms of money like land, building, plant and machinery, furniture, stock, cash and bank balance. Now the next term is receipt. Receipts refer to the amounts received by the business organization from selling assets, goods or services. Receipts may be of two types: revenue receipts and capital receipts. The next one is expenditure. It refers to the amount spent or liability incurred for acquiring assets, goods or services. For example, payment of rent, salary, purchase of goods, purchase of land, machinery, etc. Expenditure may be classified like capital expenditure, revenue expenditure, deferred revenue expenditure, etc. Now the next term is a revenue. It is the total amount received or receivable from the sale of goods or services. Next one is expense. It is the cost incurred by a business in the process of earning revenue. The next one is income. It is the surplus of revenue over expenses. In other words, we can speak it is the profit earned during a period. Or in equation form, we can speak revenue minus expense is equal to income. and income is also known as profit. Then the next term is the profit. Their definition is it is the excess of total revenues over total expenses of a business enterprise for an accounting period. Generally, profit may be categorized into two ways. Number one is the gross profit, number two is the net profit. The gross profit is the difference between sales revenue over cost of goods sold or services rendered, and the net profit is the profit earned after subtracting all the expenses. If expenses are more than the revenue, then it will be called the net loss. Then the next term is the gain. It is a monetary benefit, or we can speak it is a profit, or we can speak it is an advantage that arises from transactions which are incidental to business. Gain is a profit of irregular nature. Now the next term is a loss. It is the excess of total expenses over total revenue. Okay. Now the next term is a purchases. It referred to the amount of goods bought by a business for resale or for use in the production. Then the next term is a purchase return, or we can speak return outward. When purchased goods are returned to the seller due to some reason like not according to specifications